what we said is that all from our introduction, if at all you can be able to remember, we say that whenever the financial statement analyst is to do his analysis, the information he uses basically comes from two main areas. One, we do have the financial statements which are prepared by the company, and then we have other information. We have other information. Now, in this case, we also mentioned of the various components of the financial statement, and still, if at all you can be able to remember in CIFA section 1, you looked on the various components of the financial statement prepared by a business or prepared by a company at the end of the year, of which this financial statement include. One, we do have a financial, that is a income statement. Two, we do have a statement of a financial statement of financial position. Number three, we have statement of changes in equity, statement of changes in equity, and number four, we do have a statement of a cash flow, statement of cash flows. And still, what you covered in financial accounting CIFA section 1, you need to remember that when talk about income statement, which is also known as a statement of a comprehensive income, this one is prepared to assess what if as the financial performance of what of the business, either in terms of showing whether the company operated at a profit or at a loss. Two, a statement of financial position is prepared now to show what if as the financial position, the asset of a business, the liability of a business, and so on. On the other hand, when talk about a statement of changes in equity, this is a component of financial statement prepared to show changes in the various items of equity, which include ordinary share capital and the various items of reserves. Now, on the other hand, when talk about a statement of cash flow, this we say is prepared to show changes in cash and cash equivalent during a certain financial year. And therefore, the moment now the financial statement analyst is to do his analysis, in fact, this is the main source of what? Of information whereby he gets all the data which he uses in his analysis. Now, on the other hand, when talk about the other information, we are talking of the other information which will be prepared by a company and which now will be accompanying the financial statement. Now, this include what? This include, number one, what we refer to as a director's report. Director's report. Now, when talk about director's report, this is a report compiled by the directors of the company. And in that particular report compiled by the directors of the company, they will be highlighting various aspects of the company. For example, the dividends they are proposing to pay to the shareholders. They will also be highlighting some of maybe development which occurred in the company. For example, if the company opened a new branch in course of the year and so on, all those particular aspects will be mentioned in the director's report, of which that information is very, very vital when it comes now to doing the financial statement analysis. Now, the other information will also include what we refer to as the auditor's report. Now, the auditor's report, this we say is a report which is compiled by the auditor of the company once now he has audited those financial statement. And in this particular report here, the auditor will give something which is known as an audit opinion, of which an auditor can either give what he refers as a qualified opinion or what he refers as a clean opinion. Whenever now the auditor has given, for example, what he refers as a qualified opinion, this means that those financial statements which were prepared by a company do not reflect a true and fair view of the company's state of affairs, and also those financial statements were not prepared in accordance with the relevant standards. And whenever now the financial statement analyst will to, or will be analyzing this financial statement, then that will actually play a very vital role, because by the end of the day he will be in a position to conclude that those particular financial statements, or maybe the information which is included here there is not prepared or presented in accordance with the relevant standard. So therefore this particular report here is very important when it comes to analyzing the financial statement. Then from there we do have the other sources of information which is used in the analysis, and that is the management report. Now, when talk about the management report, this is a report by the management of the company concerning one, the responsibility when it comes to preparing the financial statement, the responsibility of the auditor when it comes now to the financial statement, and also this management report will include the other reports, maybe compiled, for example, by the CEO of the company concerning the various development or maybe aspect of the business in a given year. So therefore this information here is also very important whenever now the analysis is to be done. Now the other source of information is something known as a management discussion and analysis. Management discussion and analysis. Now when talk about management discussion and analysis, this is a kind of a report by the management of the company concerning the various favorable and also unfavorable events which occurred in course of the year, and which partly affected the operation of of the company. So that information also is very important to the financial statement analyst the moment now he is to do his analysis. Now the other source of information is something known as the corporate social responsibility report. Now remember, when talk about the corporate social responsibility, these are those particular activities. These are those particular activities which are undertaken by a business entity or maybe by a company, and which are meant to promote now the welfare of the society in which now the company operates. For example, a company may be undertaking activities such as maybe providing public toilets, maybe educating the needed children, and so on. And once now the company has undertaken various corporate social responsibility activities, a company is required to prepare a report of such activities undertaken, the amount of money utilized by the company, or the amount of money spent by the company in undertaking those particular activities, and that be part of the notes which will be accompanying the financial statement. So this particular information, or the information provided in that particular report, is also used by the financial statement analyst the moment he is to do his analysis. Now the other source of this other information is what we refer as explanatory notes. Now when talk about explanatory notes, these are the notes which accompany the financial statement, and which will be trying to elaborate the various items which are in the financial statement. Because once now the company prepares the financial statement, there will be various items in this particular component of the financial statement which need to be to be analyzed. So they will be analyzed, or they will be explained using what refers to the explanatory note. So therefore that explanation in respect to those items is also useful, or can also be used by the financial statement analyst whenever he is to do his analysis. Now the other source of information is something known as a proxy statement. Proxy statement. Now, first of all, when talk about a proxy, we say that this is a representative. This is a representative of a shareholder. A representative of a shareholder in the company's general meeting, meaning that if maybe you are a shareholder of a company, or maybe a member of a company, you'll not be able to attend the meeting of a company, you have a right as a member to be able to appoint another person to be able to represent you in that particular meeting. Now, during the AGM of the company, the directors are required to prepare something known as a proxy statement. Now this particular statement here will be including various information, for example information about the shareholders of the company who hold or who own more than 5% of the company's issued shares. Now that particular information which is provided in this particular report here, or basically in this particular statement, is also very, very important when it comes now to analyzing the financial statement. So therefore we do have those is actually now the various sources of information which the financial statement analyst will use whenever he is to do his analysis.